This filing can move a stock within minutes of being released. Unlike earnings reports, which are scheduled, this one can drop at any time with zero warning. Today, we break down Form 8K, what it is, what actually triggers a market reaction, and the honest truth most traders never hear.
Form 8K is a filing companies must submit to the SEC within 4 business days whenever a material event happens. Something significant enough that investors need to know about it immediately. Unlike the 10Q and 10K, which are scheduled quarterly and annually, the 8K can drop at any time. No warning. No predictable calendar. Here is the honest truth most traders never hear. Not every 8K moves a stock price. Companies file these for all kinds of routine items, some genuinely material, some pretty minor. And even when an 8K is significant, the price reaction may not happen immediately. Where to find them? SEC Edgar at sec.gov. Search the ticker and filter by 8K. Also on Webull, News tab. Press Release section. Free and immediate.
Let us talk about what actually triggers a meaningful 8K, starting with mergers. When two companies agree to merge, this gets filed as an 8K. The key phrase to watch for is definitive agreement. This specific language means the deal is legally binding, not just a rumor or a preliminary discussion. Why does this matter so much? A definitive agreement signals the merger is genuinely locked in. That is meaningfully different from early speculation or a non-binding letter of intent. The market tends to react strongly to this exact language. When scanning 8K filings related to merger speculation, search specifically for the phrase definitive agreement. It is the difference between talk and an actual binding deal.
2 more triggers worth watching closely. A new CEO announcement can be a genuine catalyst, positive or negative depending on circumstances. A respected new leader can boost market confidence. A sudden unexplained departure can spook investors. Context matters more than the headline alone. Signed contracts also get filed as 8Ks. The size and significance of the contract relative to the company's overall revenue determines how much it actually matters. Government contracts deserve special attention here. They tend to be larger, longer term, and more stable than typical commercial contracts. A new government contract can be a meaningful catalyst, especially for smaller companies where the contract represents a significant percentage of revenue. Important reminder, even strong catalysts like a definitive merger agreement, a new CEO, or a government contract may not move the price immediately. The market sometimes takes time to digest and react.
If this free education is helping, hit like, share, and subscribe right now. Follow Alpha Breakout Lab for free stock alerts every week.
Here is the honest read on how to actually use 8K filings. Most 8Ks are routine. Many cover minor administrative changes, standard departures, or routine updates. These rarely move the stock price in any meaningful way. A few genuinely move markets. Definitive merger agreements, major government contracts, significant leadership changes, these are the events worth paying close attention to. And remember, timing varies. Even a real catalyst may not move the price instantly. The market sometimes takes hours or even days to fully digest the news. The strategy? Scan 8K headlines for the keywords that matter: definitive agreement, government contract, CEO changes, and combine that information with chart and volume analysis before acting on anything.
That is Form 8K, the filing that can move stocks within minutes, but does not always. Definitive agreements signal real mergers. New CEOs need context. Government contracts carry extra weight. And not every 8K matters. Know the difference. Part 4 drops next week. Form 13F. What big institutional money is actually buying? Like this video if it helped. Subscribe so you do not miss Part 4. Follow Alpha Breakout Lab for free stock alert every week. Builders do not sleep until the dream is real.